Hi, I'm Jenny Brown. Welcome to this week's MFB news. I hope this finds you incredibly well. Good to see the back of January, the longest month in the world, and probably, certainly for me, hasn't been a great start to the year. But actually, I'm feeling more optimistic about February. I think things are going to start improving for all of us going forwards. The other great bit of news, this year I managed to do my tax return very, very early by my standards. I finished it on Saturday, so I was 4 days early. No running around on the 31st at 8 o'clock in the evening trying to find bits of paper for me this year. Not trying to show off or anything about how organised I have been. What we've got for you this week, we're going to do our usual lender update. I'm then going to be talking to you about an announcement that's been made by the Labour Party, which is going to be very, very poignant for landlords should Labour come to power. And then I'm also going to be talking to you a bit about EPCs and how landlords are viewing those at the moment. And I'm just going to finish it off on a real high, by updating you on the next stage of what's been happening with the getting back of my buy-to-let property, where I'm trying to lose my tenants because they haven't been paying their rent. Okay, so first up, so today is Wednesday, tomorrow, Thursday, is the MPC meeting where we are expecting to see another base rate increase. Now, I think the debate is not whether there will be an increase, it's how much by. The general consensus is it's either going to be 0.25% or 0.5%, bringing base rate up to either 3.75 or 4%. The general view on the market is actually that because of the levels of inflation really kind of, not going down particularly, but getting under control, and actually the longer kind of view on the horizon is that inflation is going to start coming down. There is a school of thought that actually this could be our last base rate increase, but I think only really time's going to tell on that in terms of whether a further increase will be on the cards. Also probably largely dependent on what happens tomorrow's meeting, but I think the key message for you guys is that there will be an increase in base rate tomorrow. So for those of you with variable rate mortgages, I'm really, really sorry, not good news for you. But as we talked about last week, the more positive view is that actually at the start of 2024, so in a year's time, we are expecting base rate to start coming back down again, because core inflation should be back down at 2% where it needs to be. In terms of fixed rates, actually, for those people who are suddenly thinking, crikey, I'm on a variable rate and now I've missed the boat on fixed rates, they're going to go up tomorrow as well. Actually, and we talk about this very, very often, so apologies for those that I'm repeating myself to here, but fixed rates aren't directly linked to Bank of England base rate. Fixed rates are a prediction about what rates are going to do, base rates are going to do in the future, not what's happening right now. So actually fixed rates have been coming off the boil and easing down, and we'll go into that in just a second. But if you are on a variable rate mortgage and you're really starting to feel very, very squeezed, and I know we're speaking to an increasing number of landlords who have been on very good long-standing variable rates, they've been seeing things gone up and it's just gone past the point where actually they can kind of feel comfortable at the moment, and you're thinking about going on to a fixed rate, actually now could be a very, very good time. So what have the lenders been up to in the last week? We've seen rate reductions from Virgin by up to 0.2%. So their pricing is now from 3.8% variable. That is today, Wednesday. Obviously, if base rate moves tomorrow, which we think it will, that will go up. Fixed rates from 4.49%. We've seen TSB reduce their rates by 0.1%. So pricing here from 4.99. We've seen platform home loans reduce their rates by 0.13. So variable rates here from 4.49 and fixed rate pricing from 4.79%. And we've seen NatWest make some reductions as well. So they only have fixed rates at the moment, and these rates are starting from 4.95. So as you're going to see from what I'm saying here, the kind of reductions we're now seeing, so after the mini budget where lenders pushed their rates up really quite high, then sat and waited to see how the market settled. We then saw some really large reductions, people like almost 1.5% reductions. Those have largely stopped now. Now what we're seeing is like real sort of small tweaking on rates as lenders kind of play around with their margins, trying to kind of reduce these down, bearing in mind their cost of funds to try and make their deals more attractive, but obviously while also remaining profitable. And I know a lot of people, there's this whole kind of consensus, those banks, they rip off merchants and all this kind of stuff. We do need the lenders to be profitable. If they're not profitable, they just stop lending money, and that would be bad for everybody. We've seen it happen in the past where margins have got squeezed. We've seen lenders step away from the market entirely, so lenders do need to make profits. Now, in terms of other news in lenders, we've seen Aldermore issue a limited edition product. Limited edition is where they will say we're prepared to lend X amount of millions of pounds on this particular interest rate, and once we've lent this money out, the rate disappears. Now this means that their 5-year rates are now from 5.54%, 1.5% arrangement fee. So actually in the current climate, bearing in mind Aldermore is a specialist lender, so limited companies, trading limited companies, landlords with large numbers of properties, and actually one of the things they can accept, which is actually quite weirdly unusual, is they can accept up to 6 applicants on their mortgage application. So either 6 individuals that own a buy-to-let property, which is quite unusual, or more commonly, those people whose limited company has 6 directors or 6 shareholders. These guys can work with you. Most lenders will cap out at either 2 or 4, so it's quite a unique piece there. So great to see Aldermore bring their pricing down. Is it the best on the market? No. Is it a good step in the right direction? Absolutely. We've seen Kensington issue some limited edition product, pricing now from 4.99% fixed for 5 years, but do watch those arrangement fee guys. We're seeing more and more of these at the moment, so lenders dropping their rates down, but they are pushing the arrangement fees right up. Why is this? So really what we need to think about is that, again, we talk about lenders making profits. This is all sitting around their cost of funds. What they're doing is saying, well, essentially we need to charge an interest rate of between 2 and 2.5% over our swap rate to make enough margin to make this commercially worth doing. So actually whether we charge a lower rate and a higher fee, or a higher rate and a lower fee, fundamentally we still need to make the same amount of margin however we dress it up. And so what some lenders are doing is saying, well, actually, because of the stress rates, the rental calculations, but some landlords are really struggling to make the numbers work in terms of being able to borrow the amount they want based on the rental income. So if we drive the interest rate down, because that's how we base our rental calculation, and we push the arrangement fee up, that means that we might be able to bring something to the table which works for the landlord in terms of the rental calculation, but we still have to make the same amount of money. So this is why you're seeing more and more lower interest rate products, but the arrangement fees are becoming quite high. Is it good or bad? Do you know what? It depends on the individual view. Personally, I'm not a great fan, because what we often find is landlords who are all very happy to pay the arrangement fee now because it's added onto the loan, so it's kind of like something to worry about in 5 years' time. They come to the remortgage and then they suddenly have this real rude awakening that they've actually increased their mortgage by 5% and actually this debt is still sitting there. So just something to be mindful of. Okay, so we've seen Zephyr reduce their rates and increase their fees. Again, it's the same kind of thing going on here. So their rates are now from 5.59, but again, chunky arrangement fees. We've seen Precise Mortgages reduce some of their rates actually. So they've now got 5-year fixed rates from 4.99%. Again, Precise are quite prolific in the buy-to-let space. Very, very good at limited company transactions. Landlords with large number of properties in the background. No minimum income requirement, but actually Precise, I think they're just actually priced very, very well as well. So we really like dealing with them. So good to see them drop their rates down a little bit further. Now we've seen West One introduce a change in their underwriting policy with regards to rental calculations. So what they've now introduced is a rental calculation where the calculation would be 100% coverage, assuming an interest rate of 6.09%. So that's a very, very generous rental calculation in today's markets. And this is for when we're doing a remortgage on a like-for-like basis. So if you owe £150,000 currently on your mortgage and you remortgage for £150,000 again, if there's any element of capital raising, so you're increasing the amount you owe, then this rental calculation isn't going to apply. Now this is actually quite indicative of what's going on in the market in terms of what lenders are doing in trying to find ways to work around the regulatory framework that they have from the PRA, from the FCA, in terms of the rules that sit around their underwriting policy, and there are rules that sit around the rental calculations for sure. They're trying to take these rules and then recognise or understand how they can use them to curate products which work for landlords and will help them out, particularly at the moment with the rental calculations being quite difficult. So what you're going to see over the coming weeks is lots of lenders tweaking their criteria, but where it's really going to sit is around the stress rates that they're using for like-for-like remortgages, because this is where the wording under the PRA guidance offers some real flexibility. So well done West One for bringing out this rather nice rental calculation. We've seen the Mortgage Works reduce some of their rates, so their variable rates are now from 3.59. Again, that's as of today. This will probably change tomorrow with base rate moving up. And they've got fixed rates from 3.99%. So in terms of where this leaves us on pricing, so During our usual roundup, I'm just checking what swap rates are doing. So I should have done this before I started the video actually. So looking at the information available, so 5-year swaps last night were at 3.553%. So they're really kind of stuck at around just over 3.5% at the moment. So it isn't really moving too much. Now that might get going again as we go into February, but right now we've been sitting at between sort of 3.5 and 3.6 for pretty much the whole of January, which is why you're not seeing large pricing reductions coming through from the lenders. The big drop in swap rates happened between the mini budget and Christmas. So pricing personal and straightforward properties, so variable rates are from 3.59%. Again, I really have to reiterate that's from today, will have changed by tomorrow. 2-year fixed rates are from 3.99% and 5-year fixes from 4.29%. Limited company variable rates from 3.99, 2-year fixes from 4.74 and 5 years. And I'm going to give you 2 options here because I don't necessarily like the first one. So 5-year fixed rates from 4.29%, that comes with a 7% arrangement fee, or what I would call probably a more viable option, 5-year fixed from 4.99%, and this has a 2% arrangement fee, which feels much more realistic to me. Incidentally, just as a kind of almost justification to myself, I've just done a quick calculation. So if we take the 4.29% 5-year fixed rate, we take the 7% arrangement fee and we split that 7% over 5 years. That makes your actual interest rate you're paying 5.69. If we take the 4.99% rate and split your 2% arrangement fee over 5 years, that makes your actual interest rate 5.39, so much, much better. And these are the kinds of calculations that Mortgages for Business we're doing for our clients when they're phoning up and saying, what's the best rate? We're looking at the overall cost rather than just looking at the headline interest rate, unless the client specifically says, I just need the lowest interest rate payment. So I think to summarise, a good week from the lenders. It's nice to see more pricing easing down. Obviously very, very welcome news to borrowers. I think we're going to see more reductions in the next week. But like I say, these are now going to be very, very small reductions. I do think we're almost hitting the bottom now in terms of how much further fixed rates are going to go. Now there's lots and lots of people at the moment who are saying, I'm just going to leave it. I'm just going to wait until March, April time, wait and see what happens with interest rates. And I think actually, you know, in that conversation in December was the absolutely right thing to do. But what we are starting to see is now that rates are really starting to flatten out. So maybe a few more weeks, and I think we'll probably have reached the bottom of where things are going to go for at least the next, well, 3 to 6 months at a minimum. Okay, now it's been announced in the last few days that the Labour Party is to launch a major review of the private rental sector, and that's going to be led by the head of a London council, being Hammersmith and Fulham. So in recent months, Labour has hinted at the reforms that it wants. And party leader Keir Starmer told his annual conference in October that buy-to-let landlords and second home owners will not get in first in front of local communities when it comes to buying properties. Now what they're saying is they're pledging to put in place a renters' charter within 100 days if Labour win at the next election. So essentially if they're voted in the next election within 100 days, this charter would come into play. And what this charter would do is end Section 21, reduce eviction powers for landlords whose tenant in arrears, introduce 4-month notice periods, introduce portable deposits, making it easier for tenants to switch properties, allow tenants to have pets, permit renters to make reasonable alterations to the properties, and create a national register of landlords and initiate a legally binding decent home standard in the private rental sector. Now, obviously, we know with the decent home standard, which is kind of in the pipeline from the Conservative leadership, actually some of these are already on the table and looking likely to happen. The abolishment of Section 21 we all know about, decent home standard, the landlord portal as well. So I think really more worryingly is this situation where they're talking about 4-month notice periods, reduced eviction powers for tenants who are in arrears. This would be incredibly worrying for landlords. Going through the process myself of trying to evict a tenant who has rental arrears, I can guarantee you it's not that easy. Actually, making it even harder for landlords I think would be a really bad thing, but just something to keep your eye on in terms of Labour's policies with regards to landlords. Okay, and lastly, a quick update in terms of where we are with getting my buy-to-let property back from my non-paying tenants. So first of all, just to say thank you to everybody who's been sending me emails with really nice words of support. It's really nice, actually. Thank you, it means a lot. So where are we? So the latest was that I had found out my tenant had entered something called breathing space. Now I found out a bit more about breathing space since my previous video where I've been speaking to my solicitor. So breathing space is a relatively new thing which has been introduced. So it's something which people who are in financial difficulty can enter into to essentially give them some time to think about their options, try and find solutions to the very difficult situation in which they find themselves. So it's really designed to kind of get any creditors to leave them alone and just give them some bandwidth to try and get sorted out, basically. So my tenant has entered into this breathing space, which means for 60 days I cannot pursue them for any debt. I can't take them to court to ask them to leave the property on the back of non-payment of rent. Now, one of the questions last week was that I served a claim to court on the 20th of January. I only found out about the breathing space on the 21st of January. That's when the letter arrived, so after I had contacted the court. But the actual breathing space started on the 18th of January. So there was a bit of an overlap. So because legally and under the letter of the law, I pursued my claim in court whilst the tenant was in breathing space. In theory, I have breached the conditions of that, and so my Section 8 claim should be invalid and could be thrown out by a judge. Now, I'm speaking to my solicitor, because breathing space is such a new thing, it's been in place for less than 1 year, there isn't a lot of kind of history in terms of previous court cases which set precedents. So my solicitor has done a bit of digging around, and it turns out that actually there was a court case which was very similar, and on this situation the judge looked at the dates involved and said, look, the landlord clearly didn't know that the tenant was in breathing space when they pursued the claim in court. Therefore, we are going to let the Section 8 stay in place. We're not going to say it's invalid and make you start all over again. So that gave me some hope. So our plan of action now is as follows. We're going to push back the court date for the Section 8 hearing until after breathing space is entered. I don't have a new date yet. But also what we're going to do is continue with our Section 21 as well. Now, the reason we're doing this is because Section 21 is not covered under breathing space because there's no monetary claim attached to it. So with Section 21, you're literally saying to your tenant, I'd like my property back, please. Now, the reality is that we know, or it's very likely, I probably shouldn't presume, that actually at the end of the 2-month Section 21 notice period, my tenants won't be leaving the property. So we'll have to go through court and go through the various process there again, which is very long. It's very expensive. To give you an idea of the kind of money involved, to take my Section 21 claim to court, I'm going to pay £1,000. That's in addition to the £1,600 that went with my Section 8 claim being registered to court, and also for the other legal advice that I've received up until this point. And actually there's still much more to come later down the line, so it is really expensive. But I think so what we're trying to do is hedge our bets. So we're going to continue with the Section 8. Hopefully the judge will kind of be okay with it. But as a backup, we've also got the Section 21 running alongside. Now, one of my concerns with the Section 21 was that I wouldn't be able to pursue the tenant and their guarantor for any unpaid rents. With Section 8 you can. Section 21 you're not claiming that there's no money paid, you're just asking for your property back. So what my sister has advised is that actually even if you go down the Section 21 option, you can still then pursue the tenant and the guarantor for unpaid rent sort of after they've vacated via a separate sort of claim. So actually that's made me feel slightly more reassured about things. So I'm kind of taking a two-prong approach, which is very expensive and still very long in terms of timing, but at least we're on a good trajectory. But I think the breathing space thing is a really interesting one as landlords, just for you to be aware of. I'm sure that most of you will never come across this, and I hope you don't, but it is just something to be aware of. But actually I'm feeling much more positive about it. You've all been really supportive, so thank you. And I expect I probably won't have a huge amount of news on this until mid-February, but as soon as I do, I will keep you updated. And that's me wrapping it up for this week. Thank you as always for your time. I hope you found that useful, and if you have any questions, you know where we are, 0345 345 6788. Have a wonderful week, have a lovely weekend, look after yourselves, and I will see you again same time next week.